What is a stock? I'm Nate. I'm the FitFutureMD. I upload every Monday, Wednesday, Friday, unless it's a holiday. So I didn't upload on Good Friday. But lost 30 pounds in 30 days. Make sure you pick up that free nutrition and workout guide in the description below if you are interested in how I lose weight and get healthy. And like I say, we got down to 275 on the last cut, and in this cut we're gonna get down to 250, if everything goes right. And so make sure you follow along for that journey. But in this video, I'm gonna talk about what is a stock, okay? And every individual is limited by stuff, right? As an individual, you have limitations, right? Whether it's your specific talent, your ability to earn money, and the time it takes you to use your talent to earn money, right? So a stock represents leveraging money to use other people's talents, other people's time, and other people's ability to earn money for you to earn money, okay? So a stock is a certificate of ownership, a piece of ownership in a company, right? So some people may own enough stock to own 20% of a company. Some people may own, only one share of a company, right? But basically, a company is going to divide up portions of ownership into a share of their company. And the reason you do this is either to raise capital for certain projects or to pay back investors that originally invested with the company. So most companies start out with 5 to 10 original investors to start the company off. So Amazon started out with 10 investors. Each investor paid $50,000 to start the company. So the company started out with $500,000 in capital. Whereas if Jeff Bezos just tried to come up with that money on his own, he would have had to have a loan, and whatever the interest rate was in the 90s, 10%, 11%, you put a company in the hole like that with debt, it's a lot harder to make it past the hard times. Whereas you raise money from individuals, when hard times come around, you don't have to make payments on that money, right? Kind of the idea, if you have an idea and it's a profitable idea, people will invest with you because you've done it before, or you have people that are great people that are working with you that you can convince to work with, that you can convince people to invest with you, right? But basically the whole idea of corporations is to raise that capital and then use the talents of the people that work for that company to have a bigger impact on the world, right? That bigger impact makes more money for that corporation. And a big problem out here right now is that, COVID basically made it where a lot of people are back to being individuals, owning companies individually, right? They're doing their own stuff at home or own project from home, or they found a way, to use their talents in other ways. You make less money doing that, and the competitive advantage is taken away, right? Because a lot of people working is a big one of the ways of leverage is other people's work, other people's talent, and corporations do that. But if you own your own business You're doing it by yourself. You only have your work, your talent, so you're limited in how much you can make, how much impact you can have on the world, right? So that's basically the gist of what a stock is, right? It's just really just ownership in a company. But the reason that we invest in stocks is because we are limited in our time, our talent, and how much we can earn, right? Time, talent, how much we can earn. And what we want to do is we want to take part of what we earn and invest it in what other people are earning, right? And over time, that's going to compound into, more earned income, or more income for us that we personally didn't have to earn. And that's basically the gist of the American system, right? Is that if you take a little bit of what you make and you invest it, over time you're a multimillionaire, making money, making double your salary with not even having to work. And if you do that, by the third generation of doing this, your whole family would never have to work again. Like if you had put $10,000 into McDonald's in the 80s, you'd be a millionaire, right? If you put $10,000 into Tesla in 2012, you'd be a multimillionaire, right? So that's personally my strategy on using the stock market, right? Is I'm looking for the next McDonald's, the next Tesla, the next Netflix, the next Shopify, right? Whereas that's my personal, what I'm looking for, right? And that is a very risky strategy because, when new companies come in, 90% of new businesses fail, right? And probably a lot less of those are the big corporations that raise stock, right? But it still happens. And, honestly, Tesla probably almost went bankrupt 5 or 6 times, so, and I know Amazon almost went bankrupt 10 times, right? And, they raised money. So, it's definitely a riskier game, right? Than to buy into an already established business that is gonna make money over the next 10 years or something like that, right? But you're not gonna get that huge growth as something that comes in and makes a new market, like an electric vehicle, right? So that's just the way I choose to do it, because like I say, when you make a lot of money, you preserve wealth by putting it in companies that, are steady growers, right? They already have established business, they established revenue, they have a good price to earnings, all that kind of stuff. Whereas when you don't have a lot of money, you have the little money you have, you take more risk with, because you really don't have anything to lose, right? If I throw $1,000 into something, that's nothing, right? In the grand scheme of things, $1,000 is nothing, right? And to most people, that's a lot of money, but when you really go to think about a lot of money, $1,000 is nothing, right? So instead of buying cigarettes, instead of buying alcohol, instead of going out to eat, take that $1,000, find something that could be the next this, right? The next thing, and that one investment can make you a multimillionaire, right? Or at least a couple $100,000, right? And another thing that I do is that, so I'll give you an example of Nikola, right? Nikola came out in 2020, and I got it at $12, right? That stock went all the way to $90. Of course, I didn't let it get that high. I let it get to $36. But my original investment was the $1,200 stimulus check, right? You know, I was still working. We didn't really need the stimulus check. So I took it and put it in the stock market. I put it into a company called Nikola. And I sold this at $36 and some change. So I literally had tripled up my investment, right? But what I could have done is I could have sold half at 36 and kept the rest, right? Got my original, you know, double my investment back. Basically, this is using the velocity of money, right, that I talked about in the previous video. And I could have kept the 1,000 in, you know, however many shares that was, you know, maybe 80 shares, whatever. And, you know, even though Nikola's sitting at $1 right now, you know, just that run up, you know, I could have had the stock basically for free. Already got the stock for free because it was not my money, but could have got the stock for free, tripled up on it, and still had skin in the game for if Nikola decided to, or Nikola happened to actually work out, right? You know, right now it's not looking good for Nikola, but you know, it's still a hydrogen electric vehicle, right? Hybrid. And that's just one example of one of the things that I've done. Like I say, there's many, many more. But that's what I'm kind of looking for. I'm looking for something that's going to do that and then long term actually become a legitimate business, you know, and be the next Tesla, the next Netflix, the next whatever, the next big oil company, you know. So that's my strategy, or one of the strategies, the growth strategy, right? You also have your retirement stuff, so you put it into the safer stocks, right? And you let that slowly grow over time. So no matter what, so if you do it this way only and all of them don't work out, you end up with nothing, right? You do it this way and one workout, you end up with pretty good account, right? But you also want to have that retirement account that you know is going to be there 30 years from now. So if none of those work out, at least you still got something, right? So I do both, but I just do one in the retirement account, one in the regular brokerage account, right? So that's how I use stocks. Like I say I didn't even write this down, but the reason that stocks are so good is because the barrier to entry now is very low, right? So the barrier of entry in the past was very high. You had to have at least $10,000 before a brokerage would even talk to you. Now you can invest with as little as $1, right? So you got bad credit, doesn't matter. You got evicted, doesn't matter. You've been arrested, doesn't matter. You can invest in the stock market, right? So it just, you learn the game, you use your talents and work hard, you take part of the money that you make, you put it in there, or if you get lucky and win something, you get birthday money, whatever, you can take that money and find the company for you that, you think could be the next big thing. Or you invest it long term and, 30 years from now, hopefully it's grown, right? I'm Nate, I'm the FitFutureMD. This is What is a Stock? Hopefully I taught you some stuff. If I have, leave me a comment down below, let me know. Ask me some questions. If you have any questions, love to answer those. Make sure you shop at Ensorsale.com. Ensorsale is family. Together we can rise up from humble beginnings to inspire others with the messages on our t-shirts. Wear your inspiration today, and we'll see you in the next one. Peace.